Man-made consciousness is the eventual fate of banking as it brings the intensity of cutting-edge information examination to battle deceitful exchanges and improve consistency. Business artificial intelligent machine calculation achieves hostile to illegal tax avoidance exercises in a couple of moments seconds, which in any case takes hours and days. In the money business, AI can be utilized to analyze money accounts, credit records, and speculation records to take a gander at an individual's general monetary well-being, staying aware of continuous changes and afterward making altered exhortation dependent on new approaching information. The best use of AI/ML grant is given to a bank, FI, or fintech organization that is utilizing man-made brainpower AI innovation to the best impact, making new abilities that are just conceivable through AI/ML. 3D printing empowers new shape prospects that can't be made by different methods. Patricia Cas-Medina, worldwide brand director, told Food Ingredients First. The whole cycle from sketch to the conveyance takes less time, exertion and spending plan, contrasted with customary procedures, for example, shaping, where you would need to create and deliver a form. Chatbots are conversational robots that utilization common language handling (NLP) and man-made reasoning innovation to copy human communications through a conversational interface. Bots have developed from a basic computerized instrument to an advanced colleague that can perform complex activities. Presently, they are accessible in different channels and are custom-made to different segments as per their particular needs, for example, the money-related division for instance. More than ever before, drones play key problem-solving roles in a variety of sectors, including defense, agriculture, natural disaster relief, security, and construction. The most well-known case of expanded the truth is the QR code filtering device. AI is expanding the development of fintech companies and taking care of human issues, by increasing efficiency. AI helps fintech companies in resolving human problems, by enhancing efficiency. AI improves results by applying various methods derived from the various aspects of human intelligence at a beyond human scale. Robotics is revolutionizing the way lots of banking and finance companies do business through something called robotic process automation. It is also used to automate and increase the accuracy of reports, which involve culling a profusion of details and data and are a key part of the compliance process. Machine learning process automation is one of the most common applications of machine learning in finance. As a result, machine learning enables companies to optimize costs, improve customer experiences, and scale up services. Here are automation use cases of machine learning in finance: chatbots. Mass 3D printing. These individuals sit at the intersection of 3D printing and AI and represent a federal on AI plus 3D printing in the supply chain and beyond. The birth of mass artificial intelligence intersects with fintech in future scenarios. Biotech, fintech, and infotech create the most innovative sectors of the economy. Financial technology, often shortened as fintech, is the new technology and innovation that aims to compete with traditional financial methods in the delivery of financial services. It is an emerging industry that uses technology to improve activities in the finance sector. Chatbot digital solutions. Business artificial intelligent machine chatbots are changing the way you do business and may impact your. This program was created to show how communication between humans and deep learning. Conceptually, it is not overly complex. If you can train machines to identify what makes an audience react, trust, engage, listen, act, and then train the machine to measure enough factors in those communications, how we use our words, voices, gestures, that may influence those reactions, then you can use data science and algorithms to build an intelligent machine that can improve how we communicate. Drones, AI, robotics, and augmented reality are shaping posts and delivery companies, says Accenture. And new delivery companies are testing self-driving vehicles. Drone sources included public information, paid and proprietary. Primary. These cookies are set by a range of social media services. Augmented reality. For both employees and customers of financial institutions, education is important for understanding changes in financial systems. AR and VR. Smart object automation, business artificial intelligent machine is a dominant technology whose power extends are now multiple mass media platforms that include TV, newspapers, or news media. Automated journalism, which also goes by the name of a robot. Expanding interest in measure robotization among monetary associations is driving the market. Cycle mechanization is one of the significant drivers of man-made brainpower in monetary associations. Nonetheless, it is further advancing into psychological cycle computerization, where business artificial intelligent machine frameworks can perform considerably more intricate robotization measures. For example, in May 2020, TradeStream, a fintech that sweeps exchange archives with computerized reasoning, joined forces with Infosys Finacle to actualize blockchain innovation and further mechanize exchange account. The association will permit Finacle's blockchain tech, called Finacle Trade Connect, to be incorporated with TradeStream's foundation, which utilizes AI to examine records and cut down the time it takes to mind rules or guidelines in exchange, where missteps can be exorbitant and tedious to address. Man-made reasoning improves results by applying techniques got from the parts of human insight yet past human scale. The computational weapons contest since the previous not many years has changed the fintech organizations. Further, information and the close unlimited measures of data are changing AI to uncommon levels where brilliant agreements will just proceed with the market pattern. In such tertiary sectors as computer services, healthcare, insurance, and fintech, robotics can have multiple names, and some of them are rapid automation, intelligent process automation, robotic process automation, and business artificial intelligent machine. Nevertheless, all these terms are inherently intended to describe the same concept and are applied to realize vital business objectives. Business artificial intelligent machine budgetary foundations have a long history of moving gradually with regards to change, which might be the reason they are awkward notwithstanding fintech firms. The consistently steady surge of progress that swarms the monetary innovation industry may feel problematic, yet rising new businesses are helping more seasoned and stader establishments find the estimation of profound, individual associations with their customers. Banking has moved altogether in the previous decade from being a physical area to turn into a technique for advantageously getting to riches paying little heed to a customer's physical area. Are banking experts now ready to recognize the bigger worth that fintech associations bring to their client relationship, making these organizations a match made in hell? Maybe the directing light for this organization is the desire for their common clients. As more youthful ages enter the workforce and require a storeroom for their assets, actually nobody's stop shop will answer everybody's needs. Clients today have a lot better standards than before, that checks can be stored on their telephone. Funds are accessible right away. Security levels are proper for the Pentagon. Mortgages and advances are endorsed in minutes and can be marked on the web. Responses to questions are accessible online every minute of every day, 365. Managing their record is as simple as utilizing your thumbprint to safely get to an application. Fintech is the total of advertising strategies explicitly custom-fitted for monetary innovation organizations. These organizations are utilizing innovations to improve, and eventually, computerize the conveyance, and utilization of monetary administrations to shoppers. While building an extraordinary item is the initial move towards upsetting this industry, sending the privilege of fintech showcasing methods to become wildly successful is regularly a test in an undeniably immersed market. Particularly when customary financial organizations are at long last finding rising advancements, top-tier client encounters, and buyers' needs and desires. Simultaneously, let's be honest, budgetary administrations are exhausting, from a customer's point of view. That is no mystery and we have no aim of concealing that, and neither do the greater part of the organizations that endeavor to showcase their administrations. Fintechs have a huge chance to catch a critical extent of the addressable market for their items or administrations, before the occupant banks' development workstreams fire making up for a lost time. When occupant banks are offering items and administrations which contend straightforwardly with fintech contributions, clients will have less motivation to switch, and the inactivity which describes retail money-related administrations will make it harder for fintech to increase new clients. The current circumstance offers a novel open door for fintech to showcase their items or administrations and fabricate. Marketing a new business is difficult whatever the service or product you're trying to supply. Making your voice heard in noisy marketplaces and prying customers away from established brands is a first hurdle many well-meaning enterprises never overcome. Imagine then how hard it is when your new business provides a service that involves the handling of people's personal finances. To say the challenge is intensified is somewhat of an understatement. Marketing has always been an organic, fluid process in a constant state of evolution, adaptation, and flux. Resisting change is a surefire way for companies to find themselves in the wake of their competitors. What the likes of Starling Bank and Access Pay are showing us is that, though the channels we use remain fairly constant, how we use them changes all the time. Fintech companies have taken the world of payments and finance by storm, proving themselves capable of directly competing with their more established bank counterparts by offering new ways to access and use cash through non-physical means. The ongoing coronavirus pandemic has further driven the shift to contactless payments in the Asia-Pacific as consumers see it as a more hygienic way to pay. Other fintech sectors are also ramping up their offerings. Financial technology is used to describe new tech that seeks to improve and automate the delivery and use of financial services. At its core, fintech is utilized to help companies, business owners and consumers better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and, increasingly, smartphones. Fintech, the word, is a combination of financial technology. The most talked about and most funded fintech startups share the same characteristic. They are designed to be a threat to, challenge, and eventually usurp entrenched traditional financial services providers by being more nimble, serving an underserved segment, or providing faster and/or better service. Crowdfunding platforms. Companies like Kickstarter, Patreon, GoFundMe, and others illustrate the range of fintech outside of traditional banking. Crowdfunding platforms allow Internet and app users to send or receive money from others on the platform and have allowed individuals or businesses to pool funding from a variety of sources all in the same place. Instead of having to go to a traditional bank for a loan, it is now possible to go straight to investors for support of a project or company. And while their applications range from family and friends funding to fan and patron funding, the number of crowdfunding platforms have multiplied over the years. Blockchain and cryptocurrency. Cryptocurrency and blockchain are hallmark examples of fintech in action. Cryptocurrency exchanges like Coinbase and Gemini connect users to buying or selling cryptocurrencies like Bitcoin or Litecoin. But in addition to crypto, blockchain services like BlockVerify help reduce fraud by keeping provenance data on the blockchain. And while cryptocurrency and even blockchain may be somewhat controversial uses of fintech, they have certainly taken parts of the investment world by storm in recent years. Mobile payments. It seems as though everyone with a smartphone uses some form of mobile payments. In fact, according to Statista data, the global mobile payment market is on track to surpass $1 trillion in 2019. In the years before exiting your company, increase your personal salary, and pay bonuses to yourself. However, make sure you can meet obligations. This is the easiest business exit plan to execute. Upon retiring, sell all your shares to existing partners. You will get money from the sale of shares and be able to leave the company. Liquidate all your assets at market value. Use the revenue to pay off obligations and keep the rest. Go through an initial public offering. Merge with another business or be acquired. Sell the company outright. Pass on the business to a family member. The fintech market is experiencing a shake-up, an evolution, and refining, and as startups fall away, others are being snapped up or incubated by big banks. Consolidation has been a repetitive pattern in other digitally disrupted sectors, and the time for this to happen in finance is on its way, says Natalie Eastman, Chief Operating Officer at Curve. What we may be reaching is peak money for the many, which could soon be funneled into the few. Right now, we need more scaled fintech, rather than miniature startups. Once the maturity of the fintech market improves, there will be space for new players again to build on existing propositions, says Anton Ruddinklau, head of digital and innovation for financial services at KPMG.